All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. I hope you all had a wonderful Thanksgiving holiday with friends and family. And now the new weekend, the new month is upon us, and it is a doozy to start December. What have we got going on this morning? We have got silver ripping $58 on the Comex. Man, we didn't spend very much time in the 57s, did we? Or the 56s, 55s, or 54s for that matter. Silver had a rip-your-face-off rally on Black Friday with that very suspicious cooling issue at the data center at the CME, something Bob Coleman was nice enough to come on the channel and talk about Friday afternoon in an impromptu live stream. Also talking about rumors that Paul Tudor Jones had taken out a massive billion-dollar-plus position in silver options. Also, some rumors about whales over in China standing for delivery. My friend Just Dario on Twitter was talking about that over the weekend. Look, whatever the heck it was, silver is continuing to rip this morning. And look, guys, here's the thing. Even after this rally, which has been substantial, the price of silver has more than doubled this year. Silver is still cheap. Relative to gold anyway. The gold to silver ratio is still about 74, just broke below 74, where the historical average, take, say, the last 40 years, encompassing most of my life, has been closer to 65. So even at silver 74, even after this massive rally at $58, pushing $60, silver is still cheap relative to gold. It's still got room to run. I like the shiny. What else is going on this morning? Bitcoin is getting clobbered here. It actually started last night. Look, this is a brutal sell-off. We had this low volume pump in Bitcoin on Wednesday. I had drawn this bear flag pattern in my live streams earlier in the week, and I was like, look, we're tagging the low end of this bear flag. It looks like we're ready to break down. That didn't happen. We shot up. We broke to the upside on Wednesday, suspiciously at a time, the busiest travel day of the year, when a lot of people aren't watching markets. It was a half day. When you see a big rally like that on a low volume day, a little bit, couldn't help but be a little bit suspicious of that. Then last night, suspiciously coinciding with the open in Japan, we saw Bitcoin get absolutely clobbered, closing that gap to the downside. Now it looks like that sell-off is resuming, and it all happened in a span of about 1 or 2 hours late last night. Also, besides this suspicious coinciding with Japan, we've got Japanese borrowing costs are ballooning again this morning. We had some comments from the BOJ basically saying rates are going to go up in December, or strongly suggesting that, the whole data dependent, all that wishy-washy stuff central bankers usually throw in those comments. So we've got the yen strengthening this morning. We've got borrowing costs in Japan going up in a straight line. They've been up and to the right pretty much all year here. So those worries about the yen carry trade, this big move in Bitcoin and tech stocks kind of supports that. But also contributing to the sell-off in Bitcoin, there's a lot of worries about MicroStrategy here. And MicroStrategy CFO had some interesting comments talking about forced selling if the price drops below a certain threshold, talking about crypto winter. I'm just amazed to even hear a MicroStrategy CFO even acknowledging that crypto winter is a thing. Normally, when talking about MicroStrategy, usually all you get is Michael Saylor talking about how you should take out a second mortgage on your house and sell your children's kidneys in order to buy more Bitcoin. Guy's so rigid, it's like he's been impaled on a piece of rebar or something. Please do not sell your house and mortgage your children's kidneys to buy Bitcoin, by the way. This is not financial advice, but I'm going to go out on a limb and say that'd be a bad idea. So to see the CFO of MicroStrategy come out and acknowledge Bitcoin winter and the threat of forced selling, that's pretty potent. That's surprising. And the math makes sense. I mean, MicroStrategy is at a point now where it could theoretically be trading well below the value of its Bitcoin holdings. And if we do get to that point, if MicroStrategy shares keep selling off, as a CFO of the company, how can you not sell Bitcoin and buy back your own stock with that money in order to bring your share price back up? You have to. You have a fiduciary obligation to your shareholders. And of course, if the headline ever breaks that MicroStrategy sold Bitcoin, well, then all this stupidity of the last 2 or 3 years of Michael Saylor's infinite money glitch, you can just go ahead and reverse that. Oh boy, that would be a brutal day for Bitcoin if that comes, and it may be coming. Also, we got some data about Black Friday. Black Friday was interesting. The initial headlines we saw over the weekend was a big surge. Adobe Analytics says sales were up 9%. Oh my! And everyone's like, "Where the heck is this money coming from? Who's spending more than 9% than they did last year? Probably like 10% of rich people. Everybody else is broke." But then we kind of got a little bit of a reality check shortly afterwards. We got some data from Salesforce talking about. Looks like we got a little bit of a frozen screen here. Sorry, guys, we're having some internet issues, but we're going to press through it here. What else? Where was I saying? Okay, Salesforce came in and they say prices were up 7% year over year. And so that big increase in sales that Adobe Analytics reported, it looks like it was all price increases. And it's looking like that was being driven primarily by tariffs. No wonder we're not getting CPI. Do you think do we need to put the tinfoil hat on? I know we got a grainy screen here. Maybe they're fuzzying out my stream because they know what I'm about to say. Maybe the reason we're not getting CPI or GDP or jobs data is because the data sucks and we don't want to report shitty data. Maybe that's why, because we must keep this stock market bubble pumped and inflated at all times. Hey, as a matter of fact, that's exactly what China's doing this morning. That's fun. The United States treating our economic data the same way the Chinese do. We've got China has told their statistics providers to not report home sales data. It must be because it's so good, right? Is that why we're not reporting the home sales data? Those sales are looking really good, and that's why we're ordering everybody under threat of disappearing into a government gulag not to tell you just how good they really are. Coincidentally, China Vanke, the last of the big major real estate developers in China to not file for bankruptcy, they're about to go bankrupt. They're begging their debtors for a 1-year extension on their bonds. Debtors probably have very little choice but to give it to them because they're probably not going to get anything back anyway. Might as well extend and pretend for another year. Why not? We also got China's factory activity fell for the 8th consecutive month. And we've got the CIC, the China Investment Corp. That's the Chinese sovereign wealth fund. They are dumping U.S. private equity assets. That's interesting. You got the collision of the Chinese housing collapse and deflation in China, and then you sprinkle in some of that U.S. private equity bubble that we've got going on there. The Chinese sovereign wealth fund, the Singaporean wealth fund, they're all dumping U.S. private equity. Harvard, Columbia, they're selling U.S. private equity. So who's buying it? Oh, that's right. You are, because we're parking all that crap in people's 401ks and pension funds as all the smart money around the world starts to dump it. We've also got an update on that Hong Kong fire. This was pretty interesting, guys. 13 arrests, 151 dead from an absolutely horrific fire that spread across multiple high rises in Hong Kong. We'll talk about some of the information coming out about that. Guys, I think this is the inevitable comeuppance of a multi-decade reckless build-out in China. Substandard construction, corners being cut, just build at any cost. I think the Chinese are going to be grappling with problems like this for decades to come. We've got more problems at Airbus this morning. The fuselage panel issues have been found on some unfinished Airbus planes. No word about any planes in service being affected by this, but this is the second major quality control issue for Airbus in a couple of days. There was an issue with software apparently related to a solar flare earlier this week that grounded a lot of Airbus planes right in the busiest travel season of the year, right before Thanksgiving. So that stock is down big. We've got a guy who ran a $1.6 billion Ponzi scheme, was just granted clemency by President Trump less than 2 weeks after reporting to prison. That's just great, isn't it? Like, in the rare instance that we actually prosecute white-collar crime, the guy stole over $1 billion in a Ponzi scheme. He spent a couple of days in prison. He took a nap in a cage, and they let him out of jail already. Gotta love it. Crime is just legal for a fee, guys. It's gross. What else? The U.S. can't build ships anymore. They canceled the Constellation frigate program. That's great. And Ukrainian drones are blowing up Russian oil tankers. Over the weekend, we had 3 attacks on Russian Shadow Fleet tankers, along with some attacks on pipelines and refineries. The Ukrainians are leaning hard on the Russian economy, attacking their oil infrastructure to try to relieve pressure on the front lines, where this war of attrition is what are we in our 3rd year, entering our 4th year soon here? Good God. We got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance today. Don't forget that like button and that subscribe button for the YouTube algorithm. And hey, why don't you guys come on back tomorrow and have your coffee with the melon heads, because we do this one every single day. Oh, that's good wake-up juice. Well, right now, the U.S. S&P 500 is lower by about 40 points or 0.59%, just off its lows of the morning here. Stocks are down pretty much across the board this morning. The Dow off by 230 points, 0.45% lower as well. And the NASDAQ is leading the way lower, down by 188 points or 0.74% lower, although we're getting a couple of green candles here. Looks like a little bit of bidding into the open here, but stocks are still down. The dollar is weaker as well, 99.13 for the Dixie. That's off by 33 basis points this morning, now 34. The Japanese yen is playing a big role in this move in the dollar this morning. We'll get to that in just a moment. Looking over at the bond market, we have got yields are higher on the long end, and I think you'll find that is true in most of the world today. We got a little bit of sell-off in long-term debt. The 30-year yield, 4.737. That's higher by 6.5 points. The 10-year back above 4%, 4.08 on the 10-year. That's up 6 points also. The 2 years at 3.520, higher by almost 3 points. And the 1 month is actually lower by 2 points and change at 3.948. And looking over at the commodities, oh, look at my beautiful shinies this morning. Let's start with spot gold, $4,248 for spot gold, higher by 17.5 bucks or 0.42% higher. February Comex gold futures at 42.82. We went as high as 42.99, threatening to recapture that 4,300 level in the futures there. That's up by 27 bucks or 0.65%. But of course, the big move is in silver, starting with spot silver in London, $57.62 this morning. That's higher by $1.20 or 2.14% higher. But look at those New York Comex numbers there. Now, also note, we're talking about the March contract here. We've rolled over. The December contract is no longer the front month. They'll be standing for delivery or closing out, settling in cash, whatever they do at the Comex. So we're now talking about the March contract, and right away, $58.12. We hit an intraday high of 58.39 a few minutes ago, higher by 95 cents, 1.66% higher. I like the shiny. We've got an article about silver prices coming up here. But note, guys, the New York price, now again, we've had the contract roll, so there's a little bit more time value reflected in that. We were talking about December, now March, 3 months from now. But we've got that Comex front month future is now about 50 cents higher than the London spot price. That is a little bit of a reversal from what we saw with the shortages in London. And we had articles last week about shortages in Shanghai. Now we're seeing this big rip in the New York price. These regional disparities between supply and demand, they're kind of moving around the world as we shuffle metal back and forth to try to plug these holes in the silver supply chain. The solution is higher prices. They can play games with SLV and options and everything else to try to slow it, but they can't stop it. Sooner or later, the prices will move higher, and we're getting more of that this morning. I just love that shiny. Copper's higher by 1.2%. Platinum's higher by 0.1%. Palladium's up by about 0.25%. And oil is a little bit higher this morning, up 0.7%, $58.96 for January WTI futures. Maybe some of those Ukrainian attacks over the weekend pushing oil prices higher this morning. Let's look at Bitcoin. Rough morning for Bitcoin, $86,139. Most of that decline happening in a span of about 2 hours last night, right conspicuously at the open in Japan. But I also can't help but notice we had this low volume pump on Wednesday, all right? This big spike when nobody was looking, and now we have just immediately filled that gap right back down. It's almost like somebody engineered a pump on low volume and then sold right into that strength and cashed out while retail chased. That's crypto for you, folks. And also, I had drawn this little bear flag pattern a couple of days ago. I had thought we were going to break right down from it, but instead we did this gap up, gap back down, and now we're going to break down from that pattern here. Bitcoin's heading lower, guys. We're going to have bumps along the way, but we're heading lower for the time being. Now, we got an interesting story here about MicroStrategy. Bitcoin slumping again. The biggest corporate owner admits it may have to sell if things get worse. And guys, the second that headline breaks that MicroStrategy is selling, you better believe there is going to be a massive dump in Bitcoin. as Saylor's infinite money glitch turns out to be finite after all. It's funny how that works. Bitcoin attempted to rally over Thanksgiving holiday break. That didn't go so well. The top executive at Bitcoin's biggest corporate owner has laid out the parameters that would force his company to sell some of its $56 billion worth of cryptocurrency. Fong Li, CEO of Strategy, said Bitcoin would be sold if the company's multiple to net asset value, or MNAV, a valuation metric that divides the company's market cap by the market value of the Bitcoin it holds, fell below 1. Now, what he's talking about here, look, if your company is worth less than the assets your company owns, then it makes sense to sell some of those assets and buy back your company stock. You have to do that as a CEO, and your fiduciary obligation to your shareholders. And right now, we're getting pretty close to that. If it hasn't happened already after this sell-off this morning, we got to be right there. So Strategy selling Bitcoin to buy back their own stock to keep their company in line with net asset value. I mean, that is catastrophic news for Bitcoin. And also, I might add, guys, that shout out to my friend Doug from my Patreon group. Doug Bowman sent me this, and we were talking about this in my Patreon Zoom last night. MicroStrategy or strategy, whatever you want to call it, they're fixing to get booted from the MSCI indexes. Morgan Stanley is saying basically that Strategy is no longer a company. It's no longer a stock. It's basically just a fund. It's a treasury company. They're saying these treasury companies don't belong in the stock indexes because they're essentially ETFs, mutual funds, hedge funds, whatever you want to call it. They don't belong in there. And, what's the defense? No, MicroStrategy is a software company. What do they do? Like $15 worth of software business? So if they get kicked out of the MSCI indexes, then you're talking about a lot of selling by the ETFs of Strategy shares. That will, of course, send Strategy shares lower, could create the situation that the CEO is describing here, where they're forced to sell their Bitcoin holding. This is a very real threat for Bitcoin. And guys, it's still very early in Bitcoin winter here. This is going to be going on for quite a while. And actually, I think they were even saying that. He mentions here it is right here. So now as we're looking at Bitcoin winter, as we see our MNAV compressing, my hope is our MNAV doesn't go below 1. But if we did and we didn't have other access to capital, we would sell Bitcoin. He told podcast interview that published Friday. That would be a last resort. So, I mean, here, even just the CEO of Strategy admitting that Bitcoin winter is a thing, that's huge right there. Not good here. And by the way, did we really think infinite money glitches were going to stay infinite forever? I realize that's the nature of infinity, but it was never infinite. And apparently the idiots running the California Public Employee Retirement System, or the largest pension fund in the country, didn't realize this. Largest U.S. pension fund, CalPERS, faces heavy losses as Strategy investment drops to $80 million. Shout out to my buddy Pasta Man, who sent me this one last night on our Zoom call as well. They put pension money in the Saylor's infinite money glitch. You've got to be freaking kidding me. Who are these people making these decisions? California's Public Employees Retirement System has been caught on the wrong side of a recent sell-off in Strategy, with its first bet on the Bitcoin proxy stock sliding from more than 144 million to about 80 million in a matter of months. Let's see, 80 over 144. They only lost 45% in a few months. That's a good trade there. According to a recent SEC filing, CalPERS acquired 448,000 Strategy shares in the third quarter, paying over 144 million for the position. The stake, which gave the fund direct equity exposure to one of the most volatile Bitcoin plays in traditional markets, is now worth roughly 80 million bucks. In the context of CalPERS, the hit is manageable. The fund manages over $550 billion in assets for more than 2 million public sector workers and retirees, making it the largest public pension plan in the U.S. So the Strategy stake represents only a tiny slice of its portfolio. So they're immediately trying to downplay the impact on the pension fund. What they're not mentioning is that the CalPERS fund is already catastrophically underfunded based on what their expected liabilities are. So they can't afford these losses at all, no matter how small they are as a percentage of their portfolio. And I just have to ask, who are these a-holes that are putting freaking pension money into Strategy stock? I mean, who listens to Michael Saylor talk for more than 30 seconds and says, yeah, let's put pension money into whatever this guy's selling? I get it. I own Bitcoin, guys, and I sold a lot of my Bitcoin over the last few months, but I still hold a little bit of it, and I'm generally bullish Bitcoin in the long term. But Michael Saylor's nuts. The guy's nuts. All right. He tap dances on a knife's edge perpetually. One day he's going to slip and he's going to get liquidated. And that may be very close here. It's grotesquely irresponsible to put pension money into this company. Well, let's talk about something a little more positive, shall we? Silver extends record-beating rally on tight supply and Fed outlook. I just love that shiny. Silver jumped to a fresh peak on Monday with traders placing speculative bets, giving ongoing supply tightness and rising expectations for an interest rate cut in the U.S. Gold was steady. The white metal rose as high as $57.86 an ounce. Those are rookie numbers. You got to bump those up. After soaring almost 6% to a record on Friday, it has climbed for 6 consecutive days and doubled in value this year, outpacing a roughly 60% rally in gold. A record amount of metal flowed into London in October to ease a historic squeeze in the world's biggest silver trading hub, but this has put other centers under pressure. Inventories and warehouses linked to the Shanghai Futures Exchange recently hit their lowest in nearly a decade, and the cost of borrowing the metal over 1 month remains elevated. Shortages in the global market as a result of the recent squeeze in London are still being felt, said Daniel Hines, a commodity strategist from ANZ Group Holdings. With gold taking a breather, it appears investors have turned their attention to silver. And as I mentioned, guys, silver remains cheap relative to gold. We are looking at the gold to silver ratio, the number of ounces of silver it takes to equal the value of 1 ounce of gold. And we are sitting here at 74. I've been watching this 75 level. I'm going to take a stab at going to my local coin shop and trading some of my silver for gold at this level here. But 65, this is the historical average, this bottom red line here. Let's set this to weekly candles so we can zoom out on the chart. Actually, let's set this to monthly candles, shall we? So you can kind of get a better idea here. Let's go back to about 1980. All right, you can see that. And why 1980? Because that's pretty much my whole lifespan. The average gold to silver ratio since 1980, pretty much since the end of the Hunt brothers, has been about 65. And you can see we went ridiculously above that a couple of times in the last few years. We went up to like 125 in 2020. We were at 105 earlier this year. And now we're back down around 75, but still historically high. Silver is still underpriced, undervalued relative to gold. And, you know, the historical average of the last 40 years, about 65, means we could keep heading lower, guys. Gold could tread water and silver could continue to rip for quite a while here. And that's why I always say I like the shiny. Meanwhile, we've got treasuries fall as Japanese sell-off ripples through bond markets. And I can't help but notice that the big drop in Bitcoin corresponded with these big drops in treasuries in Japan overnight. Treasuries started the post-Thanksgiving week on the back foot as a slide in Japanese debt spilled over into bond markets globally. The yield on U.S. 10-year notes rose 3 basis points to 4.04, following a jump in Japanese equivalent to the highest since 2008 on the prospect of a Bank of Japan interest rate hike later this month. That also pushed up rates on bonds from Europe to New Zealand. Japan's 2-year borrowing costs, among the most sensitive to changes in monetary policy, climbed above 1% for the first time in 17 years. The move was fueled by BOJ Governor Kazuo Ueda talking up the prospects for a rate hike, leading money markets to lift the chance of a move on December 19th to around 80% from less than 25% 1 week ago. So the market was unprepared for these comments from Kazuo Ueda that they're going to be hiking. And look at the effect here, guys. We are looking at the Japanese 10-year JGB yield. All right. Cost to borrow for 10 years in Japan. Look at that big green candle last night, 1.873%. A 7 basis point jump overnight. And again, this started right about the time Bitcoin started selling off hard. I can't ignore the correlation here that yen carry trade worry may be coming back to the forefront. And look, guys, zoom out on this chart all year. All freaking year, borrowing costs in Japan have been up and to the right, and it appears to be accelerating as we go, steepening here. And, well, this experiment and modern monetary theory in Japan is just going great, isn't it? I'm sure it's going to be great for the average person in Japan when they realize that they've caused all this inflation. And also interesting here, guys, we have seen, this is now the USD JPY chart. We have seen a very sudden drop in USD JPY over the last 2 weeks or so, pretty much when the Japanese finance ministry came out about a week and a half, 2 weeks ago, and said they were basically trying to jawbone the yen lower. Or when I say jawbone the yen, they were trying to stop the yen from weakening. When we see this chart move lower, that is a strengthening in the yen. And you can see over the last 2 weeks, the yen has strengthened, including, let's zoom in a little bit, a great big red candle this morning. So the yen is a lot stronger this morning. That's contributing to that fall in the DXY that we talked about earlier. But it's also interesting to know when we zoom out here that the yen has been weakening pretty substantially over the last year or so, last 2 weeks notwithstanding. So we're a far cry from this absolute panic that we had in August of 2024 when everybody was really worried about the yen carry trade unwinding. We haven't even started that yet. That's the point I'm making. If we're at the brink of a sudden strengthening in Japan, like we saw in 2024, at the same time Bitcoin is crashing, at the same time the AI bubbles are coming to the forefront, keep an eye on Japan, guys. Keep an eye on that yen and those long-term borrowing costs. I tell you, the conditions are ripe for a really brutal sell-off. Everybody's going to be talking about Santa Claus rallies on CNBC this morning. I'm not sure Santa's coming for the market this year. Now, let's talk about Black Friday here because we got some mixed signals. Shoppers spend billions on Black Friday to snag holiday deals despite wider economic uncertainty. So they're making it sound like the consumer's doing really good here. Despite wider economic uncertainty hovering above this year's holiday season, shoppers turned out in big numbers for Black Friday, spending billions of dollars both in stores and online. Adobe Analytics, which tracks e-commerce, said U.S. consumers spent around $11.8 billion online on Black Friday, marking a 9.1% jump from last year. Traffic particularly piled up between the hours of 10 a.m. and 2 p.m. local time nationwide, when $12.5 million passed through online shopping carts every minute. So Adobe Analytics says spending up 9.1% year over year, big jump. I don't know where this money's coming from. It's got to be buy now, pay later or credit card debt. It's certainly people don't have the cash. But look, big increases in spending. Maybe it was really good. And no, because then we get this data from Salesforce, and it kind of makes sense here. Still, rising prices could be contributing to some of those numbers. U.S. President Donald Trump's barrage of tariffs on foreign imports have strained businesses and households alike over the last year. And despite spending more overall, Salesforce found U.S. shoppers purchased fewer items at checkout on Black Friday, down 2% from last year. Order volumes also slipped 1%, the firm noted, as average selling prices climbed by 7%. This year's holiday spending rush arrives amid heightened economic uncertainty for consumers. Beyond tariffs, workers across public and private sectors are also struggling with anxieties over job security amid both corporate layoffs and after effects of the 43-day government shutdown. So you've got Adobe Analytics says people are spending more. Salesforce says it's all because of price hikes due to tariffs. Well, no wonder we're not getting CPI. That's all. I guess we're going to do what China does. When the data sucks, we don't report the data. No CPI, no non-farm payrolls, no GDP this quarter. And yeah, that is what the Chinese do. So I guess we're all kind of taking our cues from the communist playbook these days. China tells stats providers to halt home sales data publication. Again, that must be because the numbers are just so good, right? Two of China's private data agencies withheld monthly home sales figures at the government's behest, people familiar with the matter said, stoking transparency concerns in a critical sector of the world's second largest economy. Transparency concerns in China. Oh, my goodness. Yep. China's Real Estate Information Corp and China Index Academy, which are among the country's biggest private property data providers, didn't disclose the combined sales of the nation's 100 largest developers for November on Sunday. The two agencies, which usually release the data on the last day of every month, were told by China's Housing Bureau to suspend making such figures publicly available until further notice, the people said, asking not to be named because they don't want to disappear in the middle of the night. Financial institutions that paid for the figures will still have access to them, provided they keep the data confidential, one of the people said. All right, so the housing market in China is still not that good. How bad could it be? Well, I'm glad you asked. China Vanke asked for 12 months to pay bond under extension plan. This is like the last of the big developers that hasn't gone belly up. Well, they're about to go belly up. China Vanke, the distressed builder that surprised markets last week when it proposed an unspecified delay in paying a local bond, has now asked holders to wait a year to be made whole as it faces mounting liquidity pressure amid waning state support. Shenzhen-based Vanke, one of the nation's largest builders by sales, told creditors on Monday that it was seeking a one-year delay to pay a 2 billion yuan, or about 283 million US, note originally due on December 15th, along with interest. People familiar with the matter said During the extension period, the 3% coupon would remain unchanged, meaning it's going to keep paying interest, even though it's going to keep accumulating interest. They can't afford to pay it, but it's still going to get bigger on paper, so they got that going for them. The state-backed builder announced its request last week to delay repayment on the local bond, the first of a 13.4 billion yuan wall of repayments stretching through mid-2026, but it had not specified details of the proposal. The move sent some of Ivanka's notes plunging to record lows and sparked broader concerns about Beijing's commitment to support even its largest distressed developers. Those Ivanka bonds are now trading at about 22 cents on the dollar. They're worthless. China's multi-year property crisis has led to record defaults and liquidations or restructurings at real estate firms, including giants such as Country Garden and China Evergrande Group. Ivanka, one of the last major developers to have avoided defaulting and long regarded as a key gauge of government support for China's property sector, has been grappling with severe liquidity pressures since late last year. So the real estate market is still a mess in China. Maybe the factory activity is picking up. China factory edges up. Okay, so far so good, but remains in contraction as fading holiday demand hits services. Okay, that headline's a mess. What's going on here? All right, so they say China factory activity edged up. That means this PMI index, the number went up from last month. However, it remains in contraction because the index is still below 50. So anything below 50 means there's less factory activity than there was last month. It's just falling at a slower rate. So this headline is a mess here. China's factory activity continues to fall. That's the takeaway from this one. China's factory activity edged higher in November, but remains stuck in contraction for the 8th consecutive month, while services weakened as the boost from earlier holidays faded, according to official data released on Sunday. The Manufacturing Purchasing Managers Index rose to 49.2, still in contraction territory, up 0.2 points from October, the National Bureau of Statistics said. The figures were in line with economists' expectations in a Reuters poll, but remain below the 50-point mark that separates expansion from contraction. Well, the numbers we are allowed to see, they still suck. The non-manufacturing business activity index fell to 49.5, down 0.6% from October, while the composite PMI output increase eased to 49.7, indicating a slight pullback in both manufacturing and services activities. So look, China's economy is in recession here, guys. I mean, they're still fudging their GDP numbers to say we've got 5% year-over-year growth. Not with your housing stalled, not with your factory activity in contraction, not with consumer prices racing to the floor. The data you can get out of China is bunk. Things are really bad over there. Things are bad here. They're bad everywhere. And let's see what's going on with private equity, shall we? CIC close to selling $1 billion in U.S. private equity stakes. China is dumping their holdings of admittedly mismarked U.S. private equity holdings. China Investment Corp, the nation's $1.3 trillion sovereign wealth fund, is close to finalizing the sale of about $1 billion in U.S. private equity stakes following a temporary pause in the deal, according to people familiar with the matter. Paris-based Ardian SAS is among the final bidders for the portfolio, the people said, requesting not to be named because the information is private. Fund stakes being sold include those managed by Carlyle, Hellman and Friedman, and Welsh, Carson, Anderson, and Stowe, according to the people. No word in this article anywhere about price. Just says that there's bidders on this. It doesn't say what this $1 billion stake is actually selling for. And that's a reason, because it's selling for a lot less than they're currently marked for. That's not included in the article, but that's going on. Let's see. Earlier this year, that's not it. Where is it? The Chinese fund is reducing exposure to U.S. private markets, joining some other global investors like Harvard University in diversifying away from illiquid dollar assets. Asset managers, including in Asia, are also tapping the secondary market to offload fund stakes in a bid to clean up their portfolios or rebalancing them. By the way, the secondary market is where a fund sells their holdings to another fund. It's very Ponzi-like. CIC joins other global asset allocators offloading private equity assets this year as they seek to generate liquidity. Singapore sovereign fund GIC was seeking to sell $1 billion in private equity stakes in Blackstone, Apollo, and TDR Capital. People familiar said in October. The Hong Kong Jockey Club sold $1 billion worth of assets from its fund portfolio at a discount to Dawson Partners, marking one of the biggest disposals by an asset allocator in Asia, people familiar said in the same month. So again, all these big firms, all these big sovereign wealth funds, they're all dumping private equity. being very hush-hush about what they're actually getting for it. Who's buying it? You are. Your 401k, your IRA, your pension, because President Trump signed that executive order to allow this garbage to be sold into people's retirement funds. Everybody else in the world just can't wait to sell it. Congratulations. We're all exit liquidity. Meanwhile, we've got Hong Kong arrests more suspects in the fire probe as death toll hits 151. This was a horrific fire in Hong Kong last week. Hong Kong authorities said on Monday they had arrested 13 people for suspected manslaughter in a probe into the city's deadliest fire in decades, pointing to substandard renovation materials for fueling a blaze that claimed at least 151 lives. Police continued to sweep the 7 burnt-out towers engulfed in Wednesday's disaster at the Wangfu Court Estate, finding bodies of residents in stairwells and on rooftops, trapped as they tried to flee the flames. More than 40 people are still missing, so that death toll is almost certainly still going to climb. Tests on several samples of a green mesh that was wrapped around bamboo scaffolding on the building at the time of the blaze did not match fire retardant standards. Officials overseeing the investigation told a news conference contractors working on the renovations used these substandard materials in hard-to-reach areas, effectively hiding them from inspectors, said Chief Secretary Eric Chan. I'm sure those inspectors weren't bribed either. Foam insulation used by contractors also fanned the flames, and fire alarms at the complex were not properly working, officials have said. Substandard construction, cutting corners, overbuilding. Stories like this are going to keep coming out of China and Hong Kong for years, guys, for decades even. I think that China is just beginning to pay the price for this disastrous overbuild out in the housing bubble over there. Meanwhile, a little closer to home here, Airbus shares fall 10% on reports of new quality issue on dozens of A320 aircraft. Congratulations to Boeing. You are not the plane maker screwing up today. Shares of European aerospace giant Airbus fell more than 10% on Monday morning following reports the company has discovered an industrial quality issue regarding dozens of A320 family aircraft. The flaw, which is said to affect the aircraft's fuselage panels, is delaying some deliveries, but there are no immediate indications that it has reached aircraft in service, Reuters reported, citing unnamed sources. The latest report comes after Airbus said the vast majority of the roughly 6,000 A320 family aircraft impacted by a software glitch over the weekend had now received the necessary modifications. In a statement published Monday, Airbus apologized for delays caused to passengers and airlines impacted by the issue, which affected more than half of the narrow-body fleet and forced airlines to ground jets during one of the busiest travel weekends of the year. The directive, among the largest in the 55-year history of Airbus, quickly spilled into the U.S. holiday travel and stretched to Australia. The disruption linked to solar flares hit especially hard in Asia, where the single-aisle A320 family anchors short-haul networks. Airbus stock not looking so good this morning, down 4.9%. This is priced in euros, 194.36, down by about 10 euros this morning. A couple more we're going to go through quick here. Trump grants clemency to executive convicted in fraud scheme, according to a report. David, what is it, Gentili? Is that how you say his name? David Gentili had just begun to serve a 7-year sentence for his role in a $1.6 billion Ponzi scheme that defrauded thousands. This story is just freaking gross. All right. What this company, or what these guys did, they stole so much money from so many people, $1.6 billion. Understand, that is more than the cumulative life's work of several thousand people stolen by two guys. How do you let them out of jail after less than 2 weeks? That's just gross. And look, these guys were tried. They were convicted. What they were doing, they fabricated fake backdated covenants in their agreements that allowed them to rob one fund to make up for losses they were trying to hide in another fund. These guys were dirtbags. They were using investors' money for private jets and $90,000 a year flight attendant on their private jet. These guys were crooks, and they're being let out of jail. It's so rare that we actually prosecute white-collar crime in this country. When we do, the sentences are a joke, and even then, they're let out of jail a week later. What the hell? This is like crime is legal for a fee here. This is disgusting. And I can tell you, President Trump, man, doubling down, like buddying up with these AI bros and crypto bros in Wall Street, like they are not the people who put you in the White House, dude. Whatever the hell you're doing, you are losing your base and you're losing them fast. better figure your shit out. You got the wrong people whispering in your ear. This is just awful optics. Meanwhile, Constellation class collapse sums up what's broken in U.S. Navy warship building. We're kind of out of time here, guys, but we're going to go through this quick. The Constellation class frigate was supposed to be this economical, efficient, rapidly buildable new light warship for the Navy that needs hulls. And what did we do? We modified the hell out of the design so that what we were building nowhere near resembled the original FREM class that it was based on. It was way over budget, way delayed, and now the Navy's canceling the program. They're going to build 2 out of the currently budgeted 6 ships. They're going to cancel the other 4. We can't build boats. We better figure it out because we are like sleepwalking into a naval conflict in the South China Sea with the world's #1 shipbuilder, and we don't know how to build ships. That's not good. And speaking of ships, Ukraine hit 2 Russian Shadow Fleet oil tankers with naval drones. Again, guys, we're a little light on time. The Ukrainians are targeting the Russian oil infrastructure. They've been hitting their refineries and their pipelines with aerial drones. Now they're hitting Russian tankers. They were empty, thank God. It seems the Ukrainians are not eager to cause an oil spill in their own backyard, so that's good. But still, you got guys that are merchant mariners on boats. You know, they're not responsible for the decisions their companies are making, and yet got drones crashing in, blowing up while they're sleeping in the car in their holds. Like, this just sucks. They got to sort this stuff out, whatever they do. I mean, just imagine if it lights off in the Pacific, in the South China Sea. If this is what's going on in Europe, just imagine if the U.S. and China go at it. There's still time to switch all this off. But anyway, that's probably why oil prices are higher this morning. That's almost certainly contributing. Hey, I just want to say thank you very much to my buddy Travis from Real Estate Mindset. Hey, Travis, he says, first, happy Monday. Travis, you just always got to get the last word in. Now you got to get the first word in, Travis. Hey, brother, thank you so much for supporting the channel. I appreciate that very much. You bonkers, SOBU. Check out Real Estate Mindset, by the way, guys. Hey, T.A. Chapman, thank you for gifting 20 Nobody Special Finance memberships. Welcome to the Melon Patch, you 20 baby melons. Just a reminder, guys, that every member gets a free super chat every month. You can use that, and I'll read and respond to your questions or comments live on the air. Thank you, T.A. Chapman, again for supporting the channel. And, guys, be sure and say thank you to T.A. as well. And Steve Woitis, thank you, sir, for supporting the channel. He says, in recent precious metals rebounds sniffing out a December rate cut. Well, Steve, that December rate cut is pretty much guaranteed at this point. Let's bring up the CME futures, shall we? Let's see what the Fed Watch tool is saying about the likelihood of that rate cut in December here. This is based on bond market futures, money markets, 87.6% likelihood that they cut in December, which is only a few days away. Yeah, this is happening. Also, by the way, along the lines of the Fed, we have a rumor that President Trump has finally identified his pick to be the next Fed chair, and that we may hear about that in recent days. And I think maybe one of the reasons we're seeing metals rally here a little bit, maybe we're seeing yields on the long end run up a little bit here, is because people know it's going to be a dove. Maybe some people heard the whisper name. I don't know who it's going to be. But either way, the Fed, they're going to cut. That looks like almost guaranteed at this point. Thank you, Steve, for supporting the channel, sir. I appreciate that very much. And thank you, everybody, for having your coffee with the Melon Heads this morning. Don't forget that like button and that subscribe button, you new guys, right next to that one on your way out. Appreciate that very much. Thank you, guys, for the super chats and for supporting the channel, as well as you magnanimous Melon Heads on YouTube, Patreon, and Buy Me a Coffee. Thank you, guys, for supporting the channel. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.